Well, you know it. It's Friday. Happy TGIF to you. I'm Steve Casillo. Appreciate you being here today. This is another segment of the About Mansfield Consumer Advice Series. And today being Friday, that means right over there, he comes in to the studio. Right over there over my left shoulder is the Chief Investment Officer, Phillip Washington Jr. Say hello to the audience.
How's it going, audience?
Buenos dias.
Buenos
Hey,
dias.
you know what I found out today is that you and I have an appreciation for the same song.
Yeah, we do.
And that
Absolutely.
I happened to on the drive-in this morning. I happened to be listening to the stereo in my new car, and Barry White's "You're the First, the Last, My Everything" came on, and it just became that hook. And it turns out you and I are going to be singing that song
all day
long today.
I'm about to go gym when I leave. You say I got to put it on 35? Put it on 35 all the way up.
That's the volume. Yeah. Anyway, let's get serious. A lot of people out there kind of freaking out because when I look at my stock portfolio on my phone, everything's red. And so that begs
same on mine too.
So that begs the question: when, looking into your crystal ball, when will the stock market stop falling?
Short answer is nobody really knows. It's very similar to when we've all been in a long winter, and the reporters get on TV and they ask this grasshopper. I was about to say grasshopper. This groundhog.
The groundhog.
Yeah, is winter over? The groundhog doesn't know. It's silly superstition, and nobody else knows. But the spring, what we do know is spring will come. It always comes. But short term, who knows?
All right. What's the long answer?
The long answer is spring will eventually come because it always comes. And the bigger answer is what is really going on? Well, there are principles of life that you could live your life by that always are play out. And so the simple version of principle that plays out is the principle of summer, winter, spring, and fall, right? That's the cycle of life. And so economies have cycle. From a dollar-based system, this is the relative end of the dollar-based economic system for a variety of reasons that we won't talk about on the podcast. But this is the end where you have inflation emerging, and you have central banks doing their best to fight inflation, and they're danged if they do, danged if they don't, right? Because if they let inflation run rampant, it destroys wealth. And if they tighten up money, in the short term, it destroys things, but it can preserve the life of the economy for a little bit longer. The bigger thing is you don't have a choice but to think long term, because timing this stuff is next to impossible, right? Again, we go back to winter, right? Which is, a shorter period of time, but nobody can time when winter's going to be over. Nobody can time when the stock market's going to be over. So you just have to think long term and say, all right, if this is the end of the economy, then what are we going towards? Right? What's the new economy? And that's easy, the digital economy, right? That if you look at where all the wealth is, money will flow to, and always has flown to, the freest, most open economy.
All right. And with the stock market falling, now I'm not a financial expert. You're the financial expert. That's why we bring you in. But let me see if I get if I can get this right. The people that the stock market falling affects the most are those who have planned, say, to cash out their 401k. I'm going to cash out at the end of the year because I'm retiring and I need that money. And is that right?
So assuming so if somebody was getting ready to retire and their portfolio was 100% stocks, I would say who is your financial advice from, and you should fire them 10 years ago, right? So what most people who are retired, what their portfolio looks like is going to be some sort of balanced, moderate portfolio that's maybe half bonds, half stocks. Uh, so that's what most portfolios are going to look like. And that's the portfolio that they are going to need to take into retirement, because when you get to retirement, and let me backtrack, even that portfolio wasn't safe this year because when rates went up, bonds go down. So stocks and bonds went down this year.
Yeah.
And so people are like, man, which that I call it winter, because like winter, like there's no life, like there's no life. There's some different life in spring than summer and fall, but in winter, like there's no life.
Everything's gone dormant.
Yeah. And so some people say, well, I mean, there's life in cash. What if I went to all cash? I was like, well, yeah, but if you were only like trying to survive in one season, but if you're retired, that means you're trying to live for 20, 30 years. And you trying to time when to be in cash, when to be out is not smart. So you're going to have to own some long-term stuff that's going to keep pace with the cost of living, because the biggest risk to a retiree, and the reason why they have to stay invested, is the cost of living is rising, right? And in an economy that is dying, the cost of living rises exponentially for people who have the big chunk of their money in old assets, meaning like what's the oldest and worst asset you can have in a dying economy? Like the cash.
Sure.
The cash of the economy.
Sure. And so the trick is, through investing, the staying ahead of staying ahead of inflation.
Because everything under inflation is death, right?
Right.
Everything under inflation is death, period. So you have to stay ahead of inflation, right? But life is hard, meaning like volatile, you know what I mean? Like in order, like the life-giving assets of today are the ones that were crushed the most. The Bitcoin, right? Kathy Wood's funds, ARKW, right? Those are stocks that are of the future, right? But they get crushed the most in the short term when money is tightening. But they're the ones that 10 years from now you're going to look back and you're going to say, I wish I would have owned more of it. But the pain of the experience in that moment, I couldn't deal with.
I was listening to a podcast yesterday. He said that cash is still king. Is cash still king?
I mean, like diversification matters. So
Yeah.
should you have no cash? No. In the short term, right now, those who have cash, as things are going on sale, are they going to in the short term, do better by buying assets? Yeah, but then like the question becomes, there's a lot of folks that had cash in '08 who were like, yeah, I'm so glad I had cash.
Yeah.
And a lot of those folks are still sitting on cash. They from a risk-adjusted perspective, said a different way. Jeff Bezos had his entire net worth almost invested in Amazon for 2 decades, and he saw his net worth drop 90-something% at one time, and then another 70% in the '08 crash, right? But he's still richer than most people on the planet by not market timing, right? So cash is king in this moment, but like there were a lot of people in high school that quote unquote had things better than the quote unquote nerds, but the nerds outgrew. You know what I mean? Like,
oh, sure.
Yeah, like looking in the moment, sure, but everything's relative. Like zoom out and think about how you want to be positioned long term.
Let the record show that I have no cash. and haven't had cash in probably weeks. But we're in a digital age. And
yeah. So no, it's asset allocation I think is everything, right? So meaning like understanding your goals and understanding based on my goals and my time frames for my different goals, how much cash should I have? How much stock should I have? How much bond should I have?
Right.
How much of my money should I have in this new economy? Right? That that is a art and a science, and it factors in like your emotions. And I think what a good wealth manager does is help their clients design a portfolio uniquely to them, and then help them maintain the faith, of their long-term plan when they don't feel like it, when the sky is falling.
All right, let's try this. All right, so say your portfolio is pretty solid, mm-hmm. and you make a fairly decent chunk of change. Let's talk percentages and how much money should a person stockpile into their savings account? We're talking bank. Banks pay what, 1%. So it's
they might pay a little bit more now. Rates have gone up.
So it's not for an investment purpose. It's for everyday spending or saving for the emergency rainy day, if you will. How much would you say it would be good to have in their savings account?
Yeah, I mean, it could be anywhere from 3 months to 2 years, right? Just depending on how strong their cash flow is, how aggressive they are, what they plan to buy in the next year or two. But 3 months to 2 years, which I know is not a clear answer, but it's like the difference is like it depends.
I was just gonna say it depends. You and your CPA,
Allison,
when you do your live stream with Allison, you ask a question and the answer is
it depends.
It depends.
Yeah.
In the 60 seconds or so that we have left to kind of bring this back to, do you want to recap when will the stock market stop falling?
It'll stop falling in a little while. In a little while.
In a little while.
Yeah, like the ancients say. But plug PhillipWashingtonJr.com. Like what you can do is focus on like making money. PhillipWashingtonJr.com. Just like in the meantime, like take some money if you have a business. Start learning how to podcast because you can make some money and dump it into this falling stock market.
Right.
And be happy in 10 years from my perspective.
And when the stock market starts going down, people with cash look at it as stocks going on sale.
Yes, especially if you have a long perspective and you understand the world that we're building. You're like if New York real estate went on sale and went down in price in 1915 or 1929, you would be like, I don't care where the price is now. Like I would kill to own central New York real estate like today and have bought it at 1929 prices.
Right.
That's the deal.
Phillip Washington Jr., I learned something from you every time you step into the studio. And again, we have learned again. So I heard a quote last night. I want to share this with you.
I love quotes. As
the area of our knowledge grows, so too does the perimeter of our ignorance.
Ooh, wait a minute. You got to say that again. That was deep.
Yeah. It's because the quote came from an astrophysicist.
Man.
As the area of our knowledge grows, so too does the perimeter of our ignorance.
Man, that's deep.
Yeah.
I got to sit on that for a little bit.
Neil deGrasse Tyson. Awesome. Yeah. He was on TV last night. He said he hit Stephen Colbert with that last night, and yeah, Colbert was just like, I have no response. So if people wanted to reach out and expand their area of knowledge, especially financially, how can they reach out to Phillip Washington Jr.?
At StonehillWealthManagement.com or PhillipWashingtonJr.com, one of the two, whichever you're looking to do.
That's Phillip Washington Jr. We do this every Friday right here live on Facebook, or you're watching the video on YouTube or LinkedIn, or you're listening to the podcast on your favorite podcast player. In any event, Phillip, have a great weekend. Let's do this again next week.
All right. Thank you, Steve.